Hello, hello. Good afternoon. Hey, BL. Hey, everyone. How are you guys doing? Hey, Charles. Hey, Kelvin. It's me. I'm back again. It's just a day ago that we all spoke. Good to be back. I guess you guys can see me okay, can hear me all right. Let me know how have you been doing. And if you're new to the session, let me know where you're joining me from. We'll give it a couple of minutes before we get started. Today we're here with IC Markets on a webinar going through the trade and risk management. Have you attended this session before? I see a lot of you have just joined up. If you can, put it into the chat, drop a message, say hi, let me know that you're here. Been a bit of a busy day. You saw the euro, did you see the euro drop very strongly? Aussie with a bit of a retracement as well. Hey Edmund, how are you doing? We had gold. I was busy with gold, trading it to the downside. Let me know what have you been trading today. Have you been trading today? If you have, let me know what have you been trading today. One more minute and we shall get started. I'm very well, very well. Do you have the same expectations as everyone for the banks? Pretty much. I think I don't see any big surprises here at the moment or coming up at the moment. What about you, Sultan? What do you think? All right, just about to get started. If you're ready, let me know. Put it into the chat. Say you're ready, and we shall get going. Everyone ready? Are we good to go? Thanks, Charles. Thanks, Edmund. Good stuff. Tat Choi. Fantastic. All right, let's get going. Welcome again, everyone. Thank you for attending the session here with IC Markets. We are going through the trade and risk management. Crucial topic because it's not so much, I mean, as much as it's important to know where to get into a trade, it's, crucially important to know how to manage the trade, how to manage the risk on the trade, right, before you even enter the trade. Because a lot of times what I see is that, traders might be able to enter a reasonable trade, but without a proper risk management, we see bigger than expected losses, or hopefully you'll put stop loss, but some traders have no stop loss levels, and then you end up having your losses run out of control. Okay, so this is a very important topic. If you're new to the session, if you're new to any of my sessions, just let you know that you can at any point in time put it into the chat. Let me know if you have any questions relating to what we're presenting. I'll be happy to answer your questions straight away. Don't leave it till the end, because what happens is that we go through a lot of info. Then once you get to the end, we have to scroll back and check on this and that, right? So just ask it straight away. I do have the chat open right on the side here, so I'll be able to address your questions almost immediately. All right. Hey, Desiree, how are you doing? So with that, as usual, before we get going on with and further on, any information contained in this webinar should not be construed as advice and is presented as educational material only. International Capital Markets has not considered your objectives, financial situation, and needs, and you should consider its appropriateness to your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. What it means is that a bit less risk of that today because it's purely educational, where we look at the trade and risk management. But before, what I always suggest is, learn what you can from today. It's recorded, watch the recording as well as you look to adopt this ideas or these concepts. Test it out first, right? Test it out onto a demo account, right? Understand it, test it out on the demo account. Then after that, start applying it into your trades, maybe into smaller trades first, and then into your full trading setups. Okay, a bit different this time because we are talking about risk management. So I do hope that if you are not already deploying sound key management strategies, something that you should be looking to adopt quite quickly, because it's going to save you a lot of heartache. It's going to save you a lot of pain through your trading journey. All right. So a lot of things to get through today. Firstly, the anatomy of a trade. It's not just about where to buy, where to sell, where to get off a trade. There's a lot more things to think about. I'll share that with you shortly. Where to apply, how to apply your stop loss placements, right? Where to apply stop loss, your take profit. It's not just about how much pain you want to or you can bear, right? Or how much profit you would like to take. There are actual levels or areas that you want to start thinking about applying your stop loss and take profits to. The trade manager has changed your trading to the good side. Fantastic, Charles. The trade manager is a crucial tool that we all use, just to help us identify the risk levels, the trade size, just to clarify everything visually, just so that you don't jump into a market, into a trade, and then start having to try and figure out what to do after that. All right, then we have the risk and lot size relationship. Okay, it's not just about one trade at a standard lot size. It's how to manage the risk as well, and then what is the ideal lot size and risk per trade. All right, so quite a number of things to get through today. Again, please feel free to ask me questions at any point in time. Introducing your host, myself. You all know me already, or most of you know me already. My name is Jin Dao. I'm one of the external analysts here at the Everest Fortune Group. Most of you know me as Jin. I'm an investment analyst at Everest Fortune Group. I previously managed a multi-million-dollar FX fund, and I've been trading for good 10 to 15 years now already. So I'll be happy to share with you my trading journey, my trading experience. If you ask the questions or if you need help with your own trading journey. So far, so good. Haven't lost anyone yet. All right, so anatomy of a trade, right? Anatomy of a trade. Most often what most people or retail traders think about when they look at a trade is entry, first one, right? They always think about, where do I get into a trade? Then after that, I would like to think that everyone thinks about where they're going to apply their stop loss and then their take profit level. Okay, not so often do we see traders think about the break even or even the partial profits, the trailing stop loss, or the idea invalidation. Okay, so these are the very common, these are the very common ones: entry, stop loss, take profit. Every time you enter a trade, you apply your stop loss and take profit. But what if the trade goes against you? All right, what if the trade goes against you? Where do you want to get out? You want to get off a trade as quickly as you can? Or on the flip side, if a trade goes in your direction, how do you protect the trade? Right? How do you protect the trade? Either by a break even setting, right? Moving your stop loss to break even, or closing off part of the trade, right? Closing off, if you have one standard lot, for example, closing off a half of the trade just so that you secure the profits, or move your stop loss to a partial profit area, moving your stop loss upwards, right? Not moving it down. Don't move your stop loss against you. Move it in your benefit, right? When this trade is moving with you. So, for example, if you have bought here and you see price moving upside, your stop loss might originally be below. As price goes up, you could be looking to move your stop loss higher, just so that you protect the profit that you would have made there. Okay, so protecting your stop loss using a trailing stop, or idea invalidation, where you want to get out of the trade as quickly as you can because it's going against you. All right, so let me ask you guys, all of you here, do you use the break even, the partial profits, the trailing stop, and or the idea invalidation, or are you mostly looking at entry, stop loss, and take profit? I know Charles would, because you're using the trade manager, so that's one of the key features of the trade manager, you know, with the idea invalidation, the trailing stop, the partial profits. What about everyone else? Good stuff, good stuff. Very nice to hear, or well, very nice to see most of you do deploy a little bit more than just the entry, stop loss, and take profit. I can tell you that I mostly do 1, 2, 3, 5. Occasionally 4. I use 1 to 5. All right, not so much a trailing stop. I have partial stop loss and hard stop loss. Okay, very good, very good. Similar, quite similar to you guys. For myself, right, obviously I do 1, 2, 3. For me, very seldom do I use partial profits, right? I do, if I think about partial profits, if I think about, you know, closing out part of a trade, I do tend to think, well, if I'm going to close out part of the trade, I would rather close out the whole trade. So instead of using partial profits, I do have a trailing stop, right? So first I'll move my trade to break even, move my stop loss to break even, just so that I protect the trade. Then if it continues moving in my direction, then I'll move the stop loss up with that trailing stop. But I do use a bit more of a manual application of the trailing stop. So I don't use an automatic where the stop loss moves together with price in a specific distance. I just move it accordingly based on different levels and different indicators telling me where to apply my stop loss to. Okay, idea invalidation, quite often I do close out my trade if I have it wrong, rather than to try and hope for it to get to idea invalidation. Still very important, but the trades that I get into a little bit more, the short-term trades, I do tend to close it off as quickly as I can if I realize that it's gone wrong, or I've got into a wrong, so-called wrong setup or wrong analysis. All right, so how to apply a stop loss, proper stop loss, and take profit. Like Kevin is saying, you know, partial stop loss and hard stop loss there. I want you to remember, right? Remember this line. Stop loss is beyond, take profit before. Okay, stop loss beyond, take profit before. Crucial, because what you want to do is have your stop loss beyond either the resistance level or beyond the support level. Okay, and your take profit before the support level or before the resistance level. If you're looking to buy, let's just say at this point here we're buying, we entered here, stop loss will be down below, has to be below or beyond the support level. Take profit will be before the resistance. Okay, and then if you're looking to sell at this point, let's say you're selling there, then your stop loss will be up there and your take profit will be before that support. Okay, why so? Why do you want to do this? Is because the resistance level, right? If we're looking at a stop loss beyond the resistance level acts as another barrier, right? Acts as another barrier to protect your trade to that stop loss. Very often, if my trade hits a stop loss level, I'm quite happy, right? It sounds a bit silly, but if my trade hits a stop loss, I'm quite happy, because very seldom do I see, for example, if we're selling, right? I've got my resistance there, I've got my stop loss above there, and then it goes down and it goes back up. It breaks above that resistance and hits my stop loss. Most often, I'm going to see price continue towards the upside, right? Because there was enough momentum to push price to break above that resistance level, right? To break above that resistance level, we're going to see it have that momentum to continue towards upside. If, for example, you sold with a resistance level there and your stop loss, let's say you sold at this point here, okay? Let's say you sold here and your stop loss was before the resistance level. Price could come up, hit your stop, test the resistance, and then turn back down, right? Now, let me ask you guys, how many of you have had that happen? Where price hits your stop loss, so this one being your stop loss, hits your stop loss, test the resistance, and then turn back down. Okay, we have one honest person saying me. Is there a chance where stop loss is not hit by price jumping it? What do you mean by that, Kelvin? All right, it's good that all of you have said me, I guess, right? It's very often if you have your stop loss below a resistance level or before a resistance level. So you always want it after or beyond that, right? Just so that the resistance protects. Once it hits and breaks over the resistance, you're going to see a big push towards upside. I'm not saying that, if we do it in this setup, it's not going to retrace, but the chance of it retracing is going to be lower. Okay. It goes beyond the stop loss and you end up in debt. Okay, so I'm guessing you're talking about if price shoots past the stop loss. For example, if we're selling and then price just goes up straight this way, you're talking about that. That could happen sometimes in a high volatility situation. It's not that, so it doesn't get, some wouldn't guarantee your stop loss. So you might get filled after that, if there was a big jump in price. Doesn't happen very often, only happens usually on big news events. So that can happen, but not very often, I would say. All right, sometimes it takes out the H4 stop loss and goes back in the direction already so high and still it took it out, right? Desiree, gotta check on the resistance level, right? Check on the resistance level. It might not be that it hits a H4 level. It could be just that resistance level had to be tweaked. The stop loss was actually just before that resistance level again. Right, so I would say to check on that would be to check on the resistance level at that point. All right, so very crucial. Remember again, stop loss beyond, take profit before. So that was stop loss, and we look at dynamic take profit placement. Okay, so what happens is when you look at an entry here, okay, we're looking to, for example, price, heading down, now bouncing back up to that resistance level. We're looking at it rejecting that resistance. I have a 78.6 there, price rejecting it, expecting it to turn down, right? We're looking for an entry towards the downside, the stop loss up the top. What happens here is that you're looking, as it goes up. As it goes up, it goes against you for a while before turning back down again. It goes against you before turning back down again. So what would you be thinking now? What would you be thinking? We've got a level here, we've got a level here, goes, so actually went down this way, test, and then now it's turning back down again. Okay, so what would you be thinking or looking for at this point? You'd be looking for that projection level, right? Where would you place your take profit? Obviously, we know that this, if I scroll back one more just to show you, this is a good key support level. Oops, support. I'm trying to write as properly as I can, or scribble as properly as I can. Okay, why is it support? Because you can see that that's the swing low at that point. So you could have your take profit there, but we're slightly forgetting that rule where we're looking at take profit being before the support level. Okay, so when we go into this, what you notice here is that, where's my mouse again? Okay, you notice here that this is my support level. I do have a 78.6 level just before that support level. This is where I would say, if you had your trade putting your take profit down there, could get to support, but you want it to hit, you want a high chance for your take profit to hit. Okay, so in this case, we will move our take profit from here, move it up slightly just above, oops, I can't draw a straight line, but above that support level. I move stop loss to break even too early sometimes, and takes me out of the trade. That's a very good point there, Paul. You don't want to move your stop loss too early. Okay, I will always suggest, well, it depends on what kind of trading style or what kind of trading time frame you're looking at. But if you're looking at an intraday, right, intraday, you might have that. Actually, what I just had on yesterday, what I just had yesterday on my gold, on a gold trade was, I entered a trade. I was looking for it to push higher. It was making money. I moved my stop loss up to break even, right? And then I moved my take profit even higher, expecting it to push all the way up. But what actually happened, it retraced back down and then closed out my trade. Okay, so I could have just kept it there, hit my first take profit, and then I'll be super happy there. But it went up, closed off my trade at not break even, but at a profit, but I can't remember how many pips profit there. Okay, so just be extra careful. You don't want to be too eager. Have a little bit of a buffer before you move your stop loss up. All right, so coming back to this point where we have a support level there, you do want to move your take profit before the support, right? Before the support, because this trade, right, we're looking at this pushing down, there's test, we have that fib level there, looking for further downside, and then you see price actually comes down, hits that support level before bouncing back up. Is there any guidance on to set the TP at least how many pips before the swing low? I wouldn't give you a fixed number because it's always going to be a little bit different. You do want to have different, you don't have a reason. Okay, I would say have a reason to where you want to put your take profit before the support level. Let's say, for example, in this example here, if this was your support, I'm trying to see how can I draw a straight line. Okay, just bear with me. Just slow this down a little bit. Okay, right, this is a support level. I would say that my take profit will be, so I have my support at the tail, at the swing low of the tail. I would say my take profit will be at the bodies of the swing low. All right, so this is take profit, this is support. Okay, don't try and have that fixed number in terms of how many pips away, because sometimes the tail could be super long, and then having that fixed number of pips makes it a lot more arbitrary. Okay, and then you could also do the Fibonacci levels. In this case, we had at 78.6, telling us that we should move our take profit to that 78.6 level with that support level right there. Okay, stop loss can be either beyond or before, and take profit will always be before. No, stop loss is always beyond always beyond, and take profit is always before. Okay. I heard the term ATR, average trading range. ATR is average trading range. It helps to determine placing stop loss at a safe level. Any idea on that? There is a way. I mean, you can use the ATR. There are other ways. We've got fib levels. It's just whichever fits your visual, right? I would say whichever fits your visual views more suitably, right? We can also have stop loss levels placed on moving averages, or stop loss levels placed on fib levels, right? So it's based on your strategy, but for me, I prefer to place it based on my horizontal support levels. Just makes it, no, beyond my horizontal support levels, just makes it a little bit more straightforward, right? Especially when it comes to placing my stop loss. I want it straightforward just so that I can repeat it over and over again, right? A bit less guesswork. Because sometimes when you have an ATR, it gets affected by sudden spikes in price movements, then your stop loss levels could vary quite significantly. Okay, very good questions, everyone. Keep it coming. I'm enjoying the questions. I hope I answered your question there as well, Kelvin, on stop loss always being beyond the support or resistance levels, and take profit has to be before. Okay, cool. So this is why, it comes down, it hits your take profit, closes you out, and then the next thing you see is that price bounces and goes all the way up. If you had the take profit at that level there, you would have missed the take profit, and then it would have gone all the way up. You would hopefully have closed out in the middle there somewhere. If not, it would have gone up and hit your stop loss straight away. Not straight away, but in pretty much straight away. Okay, I'm sure you all have come to that situation as well. And through the individuals I've coached before as well, I do tend to, okay, why I would always suggest, let's say again, I know I'm harping on this a lot, but crucial point is that your take profit, you always want to set it before, okay, but you want to make sure that at any point, let's say that we're sold here, right, as it comes down, it doesn't have, right, take profit is one of the ways to close out your trade. It does not have to always hit your take profit level before or for you to close out a trade, right? Does not have. And I've seen traders sit there and looking at this gap. It might be 1 pip, it might be 2 pips away from take profit, and they're sitting there going, 1 more pip, just give me 1 more pip and hit my take profit. I find that the most ridiculous thing, right? Because for me is that it's come so close to my take profit that 1 or 2 pips away, if I'm watching it, I'll just close it out. I don't want to run the chance that, in this case as well, we can see here, if it just misses, let's say if there's spread, right, a bit of a spread, and it misses your take profit, the next moment it goes up against you, you'd have missed the trade. And like Desiree says, it reverses against you so quickly that you miss the chance to close out the trade. Okay, so for me, near enough is good enough. I'm always happy to close out, when it's close to the take profit. The take profit for me is really there for in case price trades along and then suddenly spikes down, right? Well, not that much, but spikes down, hits my take profit. It's a quick close, something that can be automated. All right, I made a mistake last night and end up losing the trade. It does, so I would, if it comes close to my take profit, I'll close out the trade. Okay, I'm sorry, talking about stop loss and take profit is not it's bringing up a lot of negative experience for everyone, but it's crucial. These are things that we need to learn, get through, experience, and make sure that we place it. It does, not saying that it won't reverse against you ever again, but it's going to reduce the occurrence of that happening. All right, and it is super annoying. So when we look at risk and lot size relationship, the relationship between risk and lot size, okay, what I want you guys to do is put it into the chat. Let me know what kind of, and if you don't mind, what kind of trading account or what size of a trading account are you trading? Trading account or capital size, I mean. All right, good stuff. Keep it coming. Oh, I've got a whole variety of numbers here. Whole variety of numbers. Very good. Okay, fantastic. Those of you who have not answered, put it in, let me know. Okay, why I ask that is also because as we start looking into risk and we start looking into lot sizing, it's crucial to try and apply this, because as much as examples I can give you, I can't go through all the different scenarios, right? So just make sure that you try and apply this to your own trading capital. Okay, remember, when we talk about risk, the risk per trade should always be a small percentage of your total capital. What do I mean by small? What do we mean by small? Is that your maximum loss allowable should be no more than 2%. All right, no more than 2%. Now let me ask you a question. Why? Why 2%? Why not 3? Why not 5? If I'm a high risk taker, why not 10? Why 2? Any ideas? Why only 2%? Keeps you in the game longer? Yes. Good question there, Kevin. I'll get to that in a moment. No trading style guarantees 100% success. Of course, no way. Anyone tells you there's 100% success, bolt for the doors. Impossible. Good one, Kelvin, can be recovered quickly, right? So why 2% is because if you are risking 2% maximum loss, if you do hit a maximum loss, your trading psychology, right? Your trading psychology is not going to be super affected, right? Can you imagine losing a trade at 5%? You're gonna sit there, you're gonna start stressing out because if you lost 5% of whatever account is a big hit, right? So your psychology is not going to be too adversely affected. It's 2%. Then also your lot sizing, right? Your trade size, your lot size will not change too significantly as well, right? If you are trading a $10,000 account, losing 10% is going to be $1,000. You're going to have 9,000 after that, and 9,000 you can't do the same trade size as you did on a 10,000. You'll be over leveraging. All right, so at 2%, your lot sizing will not change as much as well. And then, of course, like Kelvin said, it's recovery. All right. Okay, recovery where it'll be easier to recover. If you hit a 2% loss, your next trade could get you back into break even, or your next trade could get you back a good way into recovery. If you have 4 trades running, do you mean 2% for each trade? That's the same question like Kevin asked, right? So what I would always clarify here is that 2%, I would say, is your max exposure, right? Maximum exposure. Maximum, no matter how many trades you get into, 2% in the worst case scenario. Because you don't want to be entering 4 trades, 2% each. Touch wood, worst case, you hit all 4 losses, and if you lost 8%, all 5 trades and you've lost 10%. Okay, can happen. So we want to avoid that. So your maximum exposure is 2%. Based on what I've seen from you guys putting in your trading account size, most of you should have no more than 2 trades open at a time. In fact, I would say that most retail traders, most part-time traders should not have more than 2 trades open at a time. Why so? It's because firstly, you don't have that much time to look at the charts or to manage your trades. So if you have more than 2, you're probably forcing out a couple of trades already. You're forcing the trades. And then secondly is you have more than 2, then you're probably over leveraging by over trading. Okay, so when you have 2 trades, it'll be easy to keep to that 2% as your maximum exposure. Fair enough? Okay, so it's not 2% in a day, it's 2% maximum. If you have 1 trade running at worst case 2% loss, then and it's been on for a day, 2 days, it will still be that 2%. Okay, it does say here, it depends on your experience level and trading style. There is a little bit of discretion on your maximum risk, but I would say that generally for most traders do keep it at that 2%. Right? So why, another elaboration of why that 2%, just looking at a 5 trade total, if you're risking 2%, first one you hit 200 and you keep going on 5 trades, you could be down 10%. And then this is on a $10,000 account. If you're looking at a 5% risk, just in losing 5 trades, you'll be down 23%. Imagine in 5 trades losing a quarter of that trading account. Straight away, like I said here, psychology, lot sizing, recovery, all going to be a lot harder if you risk too significant an amount, right? And remember, we're trading not just that one trade, we're trading for the long term. So it's really, trying to, like Charles said, keep you in the game longer, keep it at that 2% risk. Needs to be very strong at trade psychology. You do, right? So how to get stronger at trade psychology is really to try and keep as many things constant as possible, right? When you're not thinking about over too many trades or over leveraging, keep all that constants, then you start having less things to get emotional about. All good so far? You guys enjoying the session? Now let me ask you this. What's the ideal percentage per trade? 1 to 3, 5%, or 10%? What would you guys, if you didn't attend this session, what would you guys do? Well, now you're all gonna say 1 to 3. You're all gonna say 1 to 3. All right. But let me ask you it in a different way, right? As much as we, just using this as an example, right? If we were to bet on black to win, right? Depends on the market and your setup. That's true, Rojan, right? If you were to bet on black to win with a 48% chance, right? How much would you bet? You have $1,000. How much would you bet? You have $1,000. You got a 48% chance to win. How much would you bet? 1.5%. Wow, now I have to do the math. 1.5% of 1,000. 500. What about everyone else? Okay, let me make it easier. Would you bet small? Would you bet medium? Or would you bet all? Right? Because you guys are all giving me percentages. I don't want to count percentages. Hey, Jamilu, how are you doing? Medium, small, medium. All right, so fair enough, right? Good. You guys are all looking towards this end of the scale. No one's going all in. Okay, this is the same like when we're trading, right? When we're trading, you're looking to buy Let's say black could be buy, red could be sell, and or black could be up, red could be down, green could be just sitting right across. If you're looking for it to go up, how much would you jump into a trade on? You wouldn't go all in, right? You go at that small, or based on your appetite or based on the percentages, you're looking at small to medium. Fair enough. Now let me flip it the other way. I'll flip it the other way and say, now we've got 32 black slots, 4 red slots, and 1 green slot. You still have $1,000. This time you have an 86% chance to win. Are you going to go small, medium, or all in? You're still betting on black? Kelvin with this quick answer. All in. Hey, wow, most of you are still going medium. 70% RJ says. All right, so good. I mean, I see a lot of you are risk adverse. I hope this translates on to your trading as well. Okay, but so we're looking at, we have one person saying medium, a couple saying small, but one person saying all in, and most people saying medium. Okay, this is the same with trading. This is the same with trading. How do you increase? How do you increase your percentages? How do you increase your How do you increase your percentages? You're looking at a confluence of analysis. You're putting the Fibonacci levels together. You're looking at your moving average. You're looking at the news, especially for me. You're looking at your stochastics, your MACD. You're putting different levels, your fib levels or your support resistance levels in, trend, all that putting together, increasing that confluence is going to increase your chance. It's likely to increase your chance. And that's where you start looking at more medium, possibly towards, never go all in, right? But possibly towards a higher percentage. Okay, so you're more willing to risk a little bit more when you know that, or you have more confluence and a higher chance to profit. Fair enough. But that also means that do remember there are chances to still lose. So you never want to go all in just in case you hit any of these ones, but you do want to manage that risk at that level. Good. So what is the ideal lot size? Coming back to the same example again, 0.1, 0.3, or 1 standard lot, right? It all comes down to that confluence of your stop loss levels or your analysis, where your stop loss level is going to be, your trade size or your account size, right? It's a little bit on your account size, but let's say, for example, you got a 50 pip stop loss, right? How does your lot size affect your stop loss? You got a 50 pip stop loss. Let's say you got a $50,000 account trading on a Kiwi dollar. If you'll be looking to risk 2% of your account, that's $1,000. Right? If you're looking to risk 2% of your account, that's $1,000 with 50 pips stop loss. What kind of trade size would you be looking at? Right? What kind of trade size would you be looking at? Why do I have this 2? Okay. At a 0.1 lot or 1 mini, you'll be looking at $50. If you're at a 1 standard lot, you're looking at $500. Okay, so you could be looking, in this case, if you're on $50,000 and you're looking at, 1%, right? Remember, as much as we talked about 2% as a maximum exposure, you don't want to get into a trade that takes up your full 2% because you can't enter another trade. So let's say you're looking at a 1% of the account. So you'll be looking at 1 standard lot, right? 1 standard lot. And based on your account, you could be looking at a 0.1 or 0.04. It all depends on how much risk you're going to take. How much risk you're going to take affecting your trade, your lot sizing. Fair enough? See, so how much risk you're going to take affects the lot size that you get into. Again, remember, it's not 2% because you don't want to be entering in one trade and then having a maximum risk exposure. You won't be able to enter into another trade after that. Okay, so again, in another scenario now, where we've got a 20 pip stop loss, all right, a 36 pip take profit. What do you think of this trade? What do you think? You know, I did see a comment there that stop loss is too high. So now what do you think if you say that, you know, before that stop loss was up there, 50 pips, too big, I'm going to move my stop loss to 20 pips. Do you think that's a better, is this a better trade setup? Or would this be a better trade setup in terms of risk management? The first one or the second one? Kelvin says the same. Anyone else? Jamilu with 1. Okay. You know what you guys are paying attention to, I believe, is that you're looking at that 90 pips take profit, that 50 pip stop loss, you know, and Rojan said that already. You're looking at your risk to reward, right? You're looking at your risk to reward here. Okay, but it's not just the number of pips you make. It's not just about the risk to reward. Right? You want to things to pay attention to is also about the risk to reward of your trade, right? Not just the number of pips, but the risk reward of your trade. Okay, this one, big push. You know, we're ignoring that support level. I can't draw a straight line, but that support level there, right? So you do want your trade before that support level. Okay, you do want to trade your take profit before that support level, and also see at this point I do have a resistance that a resistance there. I do want my stop loss above that resistance. So actually what it looks like, you know, you need to find that balance between 1 and 2. It's not really 1, it's not really 2, because we are looking at a more reasonable take profit level here. But that stop loss could be a little bit too near. It's not beyond the resistance level. Unless you consider this, then I would have my take profit possibly just before that. Okay, so not just the number of pips, but the risk to reward. I'll also be looking at, you know, stop loss levels, take profit levels. Because there was a bit of a trick question there, you know, not 1, not 2. You do need to consider a few more points to that. Like Jan says, you know, where the trade is invalidated where it goes against you, and you're looking to close out that trade as quickly as possible. All good so far? All right, so rather than considering your stop loss and take profit levels as fixed pip numbers, right? I have a lot of questions. I've had a lot of questions before where people would ask, you know, how many pips should my stop loss be? 10, 20, 30? You know, can it be 50 pips? It's not so much about that fixed number. It's, remember, based on the technical levels of the chart where it is beyond the resistance and before the take profit. Good. All right, this part or this chart just keeps coming up over and over again, just to make sure we grind it into you, just to make sure that you remember that stop loss is beyond and take profit is before. So what's a healthy risk to reward to have? What do you guys say? 1 is to 1, 1 is to 2, 1 is to 3, or 1 is to 4, or 1 is to 5. I can keep going on. 2, 3, 3. I've got 2 saying 2s and 2 saying 3s. Anyone else? All right. Okay. So it's typically suggested to have at least a risk to reward of 1:2, right? A risk to reward of 1:2. This recording, this is recorded. I'm not, yeah, this is recorded, but I'm pretty sure you can reach out to the guys at IC to get a recording of this. That could be uploaded as well onto YouTube. Okay. Say, yep, that was right. Have at least a risk to reward of 1:2 because your risk reward helps you manage your risk of losing money from a series of bad trades. The healthy is always be patient in the market, look for the high probability setups because the market will not always the same, giving you the same. That's exactly where I'm going to get to there, Rojan, right? It's essential for identify a positive risk to reward. An example here, right? But a fixed however, a fixed reward also pose as a hurdle, right? You don't want to just consider risk to reward, right? It's not just risk to reward. You also want to consider your winning rate, right? And how do you know a winning rate? Is when you back test and demo test by forward testing by demo on a strategy just to understand how a trade works out. What's the percentage of it winning, what's the percentage of it losing, right? Because if you do have a trade or a strategy that wins 80% of the time, right? If you do have a strategy that wins 80% of the time, you could have a lower risk to reward, right? But if you have a strategy that only wins 20% of the time, then your risk to reward would have to be at least 1:4, because you know that you're not going to win as many trades, and because you're not going to win as many trades, the trade that you win does need to cover up for the potential losses of the trades that does not work out. Okay, so you need to understand by testing through experience of using that strategy, where on the scale are you, right? There's no hard and fast rule, or rather don't force yourself into the hard and fast rule. There has to be a 1:2 risk to reward ratio on a trade, because it really depends on that probability or in terms of that win rate. Fair enough. So I'll also add here as well is when we look at risk to reward, right? You're going to look at the probability. So this is something I've always added on for a lot of people I coach. You're going to look at the probability of the risk, right? The chance of you losing or the chance of you winning, flip side, chance of you losing. And then in terms of the reward, you want to look at the speed or the time, right? If you get into a trade, how quickly are you going to get towards your reward, your take profit, right? And how do you know how quickly you can get into it? It's based on the confluence of analysis, right? Because now let me ask you another question is that would you be happy to make 50 pips in 2 hours? Or would you be happy to make 50 pips in 5 hours? Which kind of, based on the analysis, the whole setup, which one would you prefer? Naturally, I think most of you would say 50 in 2 hours. So speed of reward and probability of risk, not just risk to reward. Okay, so probability of risk is your strategy history. Your risk to reward, your reward and speed will be based on the confluence of analysis. So far, so good. No worries, Desiree. I'm glad you like it. Right, a lot of times, or most people talk about is only risk to reward. I like adding in the other two factors in, just so that you get a complete picture, understanding when you enter a trade. With that said, I overran, so I don't have 20 minutes for you to ask anything. I do have time. If you have any questions at this point, do let me know. Put it into the chat. I'll be happy to get to your questions. Anything? Where can you find my coaching? I'm taking a bit of a pause right now, but reach out to me. Go into the VIP rooms, reach out to me. I'll be happy to guide you through your trading journey. Which time frame support and resistance is better? I would always suggest to do an H4, to do your support resistance on the H4 time frame. And then if you really have to, then you can look at it on H1 as well. But H4 would be a fair support resistance levels to deploy. VIP room. I don't have that link there. Reach out to guys at IC Markets. I'm pretty sure they can get you the link for the VIP room. You're most welcome there, Kelvin. All right. Hey, if you guys had a good session, you found it interesting, you found it useful, you found it going to be effective for your trading journey, put it into the chat. I look for your feedback. If you have any comments, anything, any suggestions that I should tweak, do let me know. I'll be happy to do the adjustments as required. Thank you, BL. Thanks, Kevin. Thank you, Edmund. Super. Hey, and remember, guys, Thursday morning. So we're on Tuesday evening now. Thursday morning, we do have big news. US FOMC interest rate decision to be released. Please remember, if you do have any trades, try to be neutral in the lead up to the event, and also watch out for possibly significant volatility across the board. Alrighty, so I hope you had a good session. Enjoy your attendance at this webinar today. Do remember, trade well, trade safe, and I'll catch you again. Take care now. Bye-bye.